They're the government. They're here to help. Hey, it's Eric Ossis here with Homebridge Financial Home Mortgage with my weekly update on mortgage rates and the economy for the week ending November 18th, 2022. Well, they're here to help unless they're Federal Reserve governors, that is. Last week, the CPI numbers, Consumer Price Index numbers, came in really great, giving us the best bond rally we've had in over 10 years and dropping mortgage rates literally overnight 0.5%. Well, the Fed didn't like that. They want rates to keep climbing. So this week, several Fed Reserve governors attempted to spook rates higher with bully-ish statements. James Bullard, he's the St. Louis Federal Reserve Branch governor, rattled the markets Thursday when he said he wants to see the federal funds rate climb to 7%. And Friday morning, this morning when I'm recording this, Susan Collins, the Boston Fed chief, said CPI data has not reduced my sense of what sufficiently restrictive may mean, nor my resolve. I don't mean to pick on the Fed, but they've missed the mark more than they've hit it. Until March of this year, they denied that inflation was even a problem. And by the time they finally did admit it, it was already out of control. After aggressively hiking interest rates all year long since then, they now run the risk of overdoing it and thrusting our economy into a more severe recession than may be necessary. So let's be clear, let's make sure we understand the intention of hiking rates is to slow the economy. It means businesses closing, it means layoffs, it means higher unemployment, and that will cause consumers to spend less. And by spending less, inflation falls. It continues a boom bust cycle. Boom bust, boom bust. That's what we've been going through. As a result of all the jawboning by the Fed this week, mortgage rates did not continue to fall as they probably should have. But the good news is they didn't really go up much either. Maybe bond traders listen to the economy more than the bluster of the Fed governors, and that's probably a good thing. Here are the national averages. Conventional 30-year fixed rate mortgage, 6.63%, still firmly under 7%. That's up 0.1% from a week ago. 15-year fixed rates, 6.05%. That's up 0.05 from a week ago. FHA and VA 30-year fixed rates, 6.25%. That's those are actually down a little bit, about 0.37% from a week ago. 30-year fixed rate jumbos, 6.08%, down 0.02 from a week ago. So, not the end of the world, certainly. We're happy to see those rates stay lower, and I'm just really glad that they didn't go up, much at all. So moving on, you don't know what you got until it's gone. That's a great song. We fully expect the economy to slow over the coming months, and mortgage rates will fall along with it. But as rates fall, buyers are going to re-enter the market, and competition for homes is going to go up. Remember those bidding wars we had over the last several years? Well, they may just be right around the corner. Inventory levels are still really tight. This is contrary to what you might hear in the press. Nationwide, homes are on the market only 21 days, with 64% of them selling in less than 30 days. And this is really important. Foreclosures and short sales make up only 1% of all transactions. There's no housing bubble. It's just not going to happen. For now, there's less competition in our market for homes. In most cases, homes are selling pretty much at or slightly, maybe even less than the list price. And we've had many, many transactions where the seller has paid for the closing costs. All that means it's a good time now to take advantage of the softness. You can have the seller pay for a 2-1 buy down of your interest rate, where you get a rate that's 2% below the market in year one, 1% below the market, your final rate in year two, and then it would be the same market rate, your note rate, your market rate in years 3 through 30. So you can enjoy a significantly lower payment for now, and then refinance in the next year or so when the economy does slow down and rates settle down. So I think that's a good strategy. It's a time where we do have some opportunities to take advantage of a little bit of softness in the market, because once those rates come down, the buyers are going to come back. We still have tight inventory. And you know what that means? It means price escalations and heavy competition, for those homes. And I think that's just around the corner. I'm available to answer questions or help you solve those financial story problems. Just give me a call, 206 915 3742. That's 206 915 Eric. You can email me, Eric at ericismybanker.com, or check me out on social media. Just look for Eric is my banker. Subscribe to my YouTube channel so you can get these weekly updates every week. Hope you have a wonderful Thanksgiving holiday. I'll talk to you next week.